Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 9th, 2024. And as predicted, Bitcoin is putting in a move to the downside. Not only that, the entire cryptocurrency market is putting in a strong move to the downside. This was no surprise on this channel. We've been talking about this for quite some time. We've been talking about specifically the fact that we would top at this region. Okay, I say region, not a price point, because right, once you top, it's a level, right? And the level was the 100k level, and below, a little bit above, it really inconsequential to speak of a precise price point when you're talking about the larger macro move. But there's a great many signs on the charts, actually also off the charts, right? Just in, big companies talking about crypto, news articles left and right. You have 60 Minutes, like everybody's kind of on, like, classic top signals. Like always big moves, governments decide to, governments decide to participate in the whole cryptocurrency thing at tops, right? When it gets the most attention is likely, and why does this happen? People sometimes ask, like, why is that a top signal? And this is really interesting. And I don't know if many people know about this. So the idea, according to Elliott wave theory, which is my level of expertise, my area of expertise, is you have every impulsive move occurring in 5 sequences, right? 3 motive sequences and 2 corrective sequences, right? So you have a 5-wave move, right? So let's do this real quick. And then I'll finish the video with just like the quick update, because today is actually a quick update. But I think this is really interesting. So the first is, when the trend starts. That's wave 1. Very few people catch wave 1. That even some pros don't catch wave 1. It's tough to catch, right? But once you catch it, it's unmistakable, especially once wave 2 confirms wave 1, okay? So most pros like to trade wave 3 and only wave 3 because they use wave 1 and 2 as a confirmation for wave 3. It's also quite safer to trade only wave 3 because it's hard to catch wave 1. Sometimes you get caught up in some accumulation which you thought was wave 1 but wasn't really. It was just part of the sideways accumulation, right? So that's the idea of wave 1. And very few people know about the trend happening in wave 1. Like I said, even professionals don't know it. Yep. Wave 3 is when more people start paying attention. So like your regular pros know that the trend is going on, and a decent trader is going to take advantage of wave 3. And wave 3 is typically the longest wave and the most impulsive wave. It goes the fastest, the highest, all that stuff, right? If wave 1 is 1, wave 3 is 1.618 times the length of wave 1, all right? Wave 4 is your second and final correction of the motive wave. That's when your amateurs start paying attention. Your amateurs kind of get the news. Oh yeah, this thing's going up. And they get in at wave 4 or even after. But the pros who are like machine like surgical and risk averse, they get out at wave 4. And a lot of people don't know that. A lot of people think that the best traders sell the tops and buy the bottoms. No, actually the best traders are risk averse, and they're most consistent. They avoid big losses. They take small losses here and there. They get large portions of a move. They don't get 100% of the move. Large portions of the move. So they'll actually get out. They're happy to get out and forego wave 5 just for safety's sake. So I say this a lot on the channel, but I don't think a lot of people understand. Wave 4 is when people start paying attention because all the fanfare came during wave 3. That's why you see what you see in the news when a move's almost up. And actually, there's more to this. Let's finish. So wave 4, the general public starts to pay attention. After wave 5, in distribution, so right, let's say wave 5, the top is right here, like where we're at right now. The rest of everybody, so like, you know, the general public that's not savvy, and like people who really don't know anything about trading and markets and stuff like that, they start paying attention here at the top, at the distribution phase, because it takes some time before, as we always say on the channel, before you change directions from down to up and up to down. And during this sequence of sideways distributive price action, your amateur, general public, grandma, auntie, no offense, uncle, they start paying attention. All the news articles, all the whatever, governments, the policies start rolling out, the 60 minutes of people, you know, start putting screenshots of stuff, whatever they saw, and they start getting excited, they buy here, and then the trend changes. This is why, according to Elliott wave theory, you see the social kind of buzz come to a peak at tops of moves. There's actually a technical kind of underpinning to all of that. Anyway, I digress, but I thought that was interesting. I want to share. What we're seeing right now, we saw, because yes, on this channel, we saw this as a likely distribution. And so while we were going sideways and going up and down in this range, we were saying wouldn't touch it. If anything, prep your shorts. If you know how to do that, it's tough, but you can prepare to go short, or just divest yourself of all of your positions, take profit, i.e. at that point, you will be selling the absolute top. I mean, you're, you know, top 1% trader selling this top, you know, if you're doing that on purpose. I know a lot of people do that by accident, but either way, you traded really well if you sold the absolute top. And from here on, we should see a strong move down, right? And I talked in my YouTube post about how, do you see this strong wick? This is a large imbalance in the market. The market hates imbalance, and it always fills it. So typically when you see a wick, either up or down, red or green, doesn't matter, it's going to be filled with its opposite move. So that happened so fast, the people who were selling didn't have a chance to sell. Now expect the sellers to step in equally as quickly as the buyers stepped in at this point. So I say that to mean this first move down to our first target of about 86.4 should be fast and furious, just as the move to the upside was. Okay? So the other thing is Bitcoin moving to our first target of around 86.4. And why is 86.4 our first target? I don't want to assume that everybody knows that, because there are a few new subscribers. So 86.4 I chose as a target for a couple of reasons. The first of which was the fact that in my tracking Bitcoin for the past 2 years, I tracked it matriculating along the lines of this channel, this blue channel here. And when you're talking about a channel, you're just essentially marking out support and resistance. The top of this channel is obviously resistance when you're below it, support when you're above it. We're currently above it, so it's going to serve as a temporary resistance when we go above it. Also, I really like that there's a pivot point here, so the chart was showing me that at this point there was support, right? And so if I come down to a similar area, there should also be a level of support, given that we're above that. And the final reason I like it is because my ultimate target is down here, around 60, 65, 66, 70, right? And if I take the distance of my move from the top all the way to my purported final resting spot, final support of Bitcoin, I see that my 618, my 0618, my fire ratio rests confluent with the top right here. So I like that. I like that as a wave one situation. So I think that Bitcoin is very likely to head down to maybe even 84.5, anywhere between 84.5 and 86.4, somewhere in this region, to find some support and expect a small mini accumulation before putting in wave two. Remember, wave two typically is between 38.2 and 68, 61.8% of the drop. So expect a fairly large retracement. And the final reason I really like that as a support level is because wave two invariably has to come and retest the midline of this channel. Remember, channels act as support and resistance markers for ranges, and the midline is support when you're above it, resistance when you're below it. And before leaving the boundaries of a channel, you always have to retest the midline. And wave two would be able to retest the midline if wave one found support right here. So that's what I'm seeing with Bitcoin. That's the update with Bitcoin. And obviously it goes without saying, if Bitcoin's going to go down 10%, right, to our target, more or less 10-12%, altcoins are going to go down 30-40%. So that's what you're seeing already. You can see that Bitcoin's down 4%, and a lot of altcoins are down 12%, right? 10, like, look at my shorts are down 10, 11, 12, 10%. So DYDX down 15%, multiples of what Bitcoin's done to the downside already. The other thing I want to say is everything is going according to plan from our analysis of what would likely happen. And the US dollar currency index, the Bitcoin dominance chart, right? Bitcoin dominance goes up when Bitcoin's dumping, typically, and alts dump even harder. That's exactly what we're seeing, and that's what we thought it would do. And it found support where we thought it would find support in this little mini consolidation. And again, our target's right here. And that line right here of support, now turned resistance, represents the 0618 roughly of this drawdown. And this is where I would get back into altcoins, not any time prior. I mean, this is this is stuff I would give in a paid consulting session. I would tell my client, don't think of buying any altcoins until the Bitcoin dominance chart reaches that level and hits that resistance. And at that point, just close your eyes and throw it in anything, and make a bunch of money, because alts are going to go nuts. Last but not least, US dollar currency index, we also said was likely to move up, and we said that there was a clear resistance in this move right here. There's an upward bound resistance, and this was likely a break of structure, and this was a counter. So, i.e., A wave, B wave. Expect the B wave to do something like this, and we were saying that around this point right here, and that's what we're getting. And if you get that quick and clean move, obviously it's not going to go in one fell swoop. You're going to go in 5 waves, right, according to Ellie wave theory. But that matriculation up to this resistance represents Bitcoin's drawdown all the way to our target of 66 to 70K. So, I mean, everything that we're seeing on the indicators, the US dollar currency index, the Bitcoin dominance indicator, is telling us what we're seeing in the charts, and everything's kind of going according to plan. Congratulations if you've de-risked, you've taken profit, or you're in shorts and you're not sort of a victim to this mayhem. That's it. Like, share, and subscribe if you got value. Consider buying me a coffee at the pinned comments below, or taking part in my new crypto portfolio consultation service. It is $150 per month. You can do it just for 1 month, and that's 2 hours, 1 to 2 hours with me one-on-one, going through your portfolio up to 5 assets. balancing your portfolio, identifying specific buy zones and then sell zones for each and every asset. All right, take care, everyone. Bye.